IRS Form 6251 is the Alternative Minimum Tax Form for individuals. The Alternative Minimum Tax, or AMT, is a parallel tax system that limits the benefit of certain deductions and tax preferences. You calculate your regular income tax and your tentative minimum tax separately, and you pay whichever is higher. The AMT affects taxpayers who have large amounts of certain deductions, exercise incentive stock options, or have significant preference items. Enter your name and Social Security number at the top of Form 6251. Part 1 calculates your Alternative Minimum Taxable Income, or AMTI, starting with your regular taxable income and adding back certain items. Common adjustments include the standard deduction, state and local taxes, miscellaneous itemized deductions, and the spread on incentive stock option exercises. Certain items called tax preferences, such as accelerated depreciation and percentage depletion, are also added back to arrive at AMTI. Part 2 calculates the tentative minimum tax. You subtract the AMT exemption from AMTI. The exemption phases out at higher income levels. For 2024, the exemption is $85,700 for single filers and $133,300 for married filing jointly, with phase-out beginning at $609,350 and $1,218,700, respectively. The remaining AMTI is multiplied by the AMT rate of 26% on the first $232,600 and 28% above that to get the tentative minimum tax. The AMT is the excess of the tentative minimum tax over the regular tax. If you owe AMT, report the amount on Schedule 2 of Form 1040. You may be eligible for an AMT credit in future years if you paid AMT due to timing differences, such as incentive stock option exercises. Use Form 8801 to calculate the minimum tax credit in those later years. Tax planning software can help you estimate your AMT exposure before year-end. Fill yours out free at FormsPal.com. This is general information, not tax advice.